Yo, what is going on, you guys? I hope everybody's having a good year so far. I'm not going to take up too much of your time with introduction. If you're new to the channel, make sure that you subscribe to the channel, turn on post notifications so you are notified when I post these videos and you're able to dissect these videos as they come. This is the first episode of a 7-part series that I'm doing explaining ICC and how to trade simply, okay? And by the title of the video, of course, you already know, we're here today understanding candle science, how candles work, what a candle is, what a candle represents, what makes a candle, and the importance of candles, the opens, the closes, the highs, the lows, and wicks. All right, so with that being said, I'm going to get straight into it. First off, what are candles? All right, these blue bars, these red bars that you see going up and down, up and down, up and down, these are called candles. All right, and a candle is a visual representation of price movements. If you haven't noticed, price will always be on the right side of the chart. We're looking at USD JPY on a daily time frame. Currently, price is sitting somewhere around $153.35 right here. Okay, and at the bottom of the chart, you will always find your date and your time. Okay, simple, right? So, excuse me. I've already actually drew out an example so I don't confuse you guys with too much that's going on this chart up here. So I have an example of bullish candles and bearish candles. And we're going to go over each one of these parts, which is already obvious. So the first and most obvious part is the body of the candle. All right. First off, bullish candles, of course, push price up. Bearish candles push price down. Now, these are the 5 major components of a candle. First, we have the most obvious, which would be the body of the candle, or the candle that's filled in with the color. All right, that's just how it is. It's just the body. All right, and next we have what we call the wicks. I'm gonna put that next to there. So these lines that you see on top of the candles, these are called wicks. Okay, these lines right here, these are called wicks. Now, depending on which candle you're looking at, sorry guys, I'm a little sick too, by the way, so if you hear me kind of like clearing my throat, it's because I'm the weather's just been messing with me. But we have what we call wicks, okay? And with wicks, we have the highs of the wicks and we have the lows of the wicks. And all this represents is that how high price has went and how low price has went throughout this candle. All right, so depending on what time frame you on, really doesn't even matter which time frame you're on. It all represents the same exact thing. Now, we have also here, we have what we call the open, or this flat, the flat part of this candle, the bullish candle, and we have the close. All right, so this is where the candle started. This is where it ended. This is how low price has went throughout this candle, and this is how high price has went throughout this candle before it closed. Make sense? Now, the only difference between a bullish candle and a bearish candle is just the open and the close. Okay? So, oh, jeez. Notice how everything here on a bearish candle, everything is the same except for the color. The body is the same, the lows are the same, the highs are the same, but the only thing that differentiates the bullish from the bearish candles are the opens and the closes. Now, with bullish candles, of course, they start at the bottom and then they rise up. bearish candles start or open at the top and they push down. They open at the top and they close at the bottom. Notice how we open at the bottom and we close at the top. Okay? Simple. Very simple. So I'm going to give you a live example on how you can utilize this information to capitalize on trend reversals or market continuations. Okay? And I'm just going to go over some random stuff here because for me it's identifiable. I can see it, but for you, I want you to understand it. All right. So we already know we have a body, we have an open, we have a close, and we have wicks, which are the highs and the lows. Now, just focusing on this area right here. Okay. By the way, we're on the daily time frame. Okay, so that means each one of these candles represents 24 hours worth of time, one day. Okay, so notice how in this moment we had price rising sharply, okay, upward. This means that bulls were in control of the market, not just for 1, 2, 3, 4, 5, 6, 7. Over a week, price has been going up. But notice how significant and interesting this is. We came to this last candle, this blue candle right here. Now remember, the highs of the wicks that's how high prices went, and this is how low prices went. So in this case, we notice, okay, we have this candle's low right here. Now, when candles start to, how can I say, disrespect each other in this case, all right, or close out each other, we could potentially speculate that if there may be either a reversal or there may be a continuation. In this case, being as though price was bullish, and we noticed that on this next candle here, price closed. On this red candle, price closed. Because keep in mind, bearish candles, let's go back down here. Bearish candles close at the bottom. All right? This is where red candles end. This is where they start. Okay? Keep that in mind. So looking at this, from this point of view, we see that price was going up, and then right below this bullish candle's wick, this blue candle's wick, we see that this red candle closed out this wick, or closed out this candle. This has already given me a confirmation that, hey, the bears or bearish momentum may be indicating that there is a reversal coming and price is more likely to push downward. And in this case, we can obviously see that soon as we closed out this candle, this is where this candle ended on the red. Let's put it right here. This was the candle's end. Once this candle ended, I'm gonna move that over. Once this candle ended or closed below this wick, we now already have confirmation excuse me, that price is now reversing. Why? Well, evidently there were no more blue candles, or there were no more bullish candles going outward. If that was the case, that means the bulls will still be in control. But being as though that is not the case, and wicks, these bullish candles wicks, were being taken out, and the red candles are actually closing out, this is saying that, hey, bears are regaining control of this market. Okay? And this isn't something that's going to make you a millionaire. It's not gonna make your entries perfect. Far from it. It just gives you confirmation. And then trading, we don't need just one confirmation. We need multiple confirmations in order to execute a trade correctly. Okay? I'm gonna say that again. We need multiple confirmations in order to execute a trade correctly. And by us understanding what these candles are and how they operate amongst one another will give us a small fraction of that confirmation. All right, so I'm going to go to a different example. I mean, obviously you can see it, but I'm gonna go over to a different situation, something like right here. Okay, I'm gonna take this out. So we're just paying attention to this area right here. All right, we're just paying attention to this area, completely random. Okay, so once again, we notice that price was shooting up. This means that bulls or buying power was dominant and they were in control. But notice how as soon as we start closing out wicks or breaking lows, in this case on this red candle closed below this blue candle's wick. This is giving me a signal or confirmation, I should say, that excuse me, that bears are entering this market and they're regaining their momentum. Okay, and just obviously enough, right after we got this closed, yes, price did come back up a little bit on this blue candle, but then it shot back down for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So for almost 2 weeks, price shot down from this moment. All right, and this is the importance of knowing when these candles are actually showing their hand, and the importance of the lows and the highs. In the beginning, I can honestly tell you that I always would think that, well, if it's closing above the open or the close, that's the confirmation. That's not true, because keep in mind, there's 5 parts to a candle. For me to confirm that this is actually bearish, I don't want to see price just close below this open on this bullish candle. I want to see it close below the wick. Why? Because the wick is a part of the candle. Now, if it's only closing out half of it, I can't go based off of that. I need the whole candle to be disrespected and closed out. And once we got that confirmation, we can then dig deeper into smaller time frames and look for more confirmations to further to further our theory that price will continue to go down. Okay, I'm gonna go to another random. I'm just gonna randomly just scroll random. Okay, perfect. I like this one. Here's another example. We're going to do a bullish example because we just did 2 bearish examples. So we're going to primarily focus on this area right here. Okay. Notice how price was pushing down rapidly. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 days, price has been going in a downward motion, right? Lots of red candles in this moment. That means bears are in control of this market. Now, obviously enough, well, it should be obvious enough, is that once we started breaking above this candle's high right here, this bearish candle, and for those of you who do not know, you notice that every candle doesn't look the same, okay? Each candle tells a different story, and the stories are simple. When we see candles like this big blue one that's filled in, you can see the body clearly. This is strong momentum, okay? Now look at this candle right here. It really doesn't even show a body. It doesn't show nothing. It just kind of looks like a cross. We call this a doji candle, or in other words, a candle that can actually represent multiple different things. It could represent trend reversal. It could represent indecision. That means the buyers or the sellers, bulls or bears, are not really sure who wants to gain control of the market. Or it could just be a pause in the market. Okay, so ideally we don't want to trade off of these candles because there's no true conviction in these candles. When we see big body candles, or ones that we can actually identify the body of, these are the candles that we want to look at. So looking at this example right here, right, being as though that we're bearish, all right, we know that on this candle right here we have the low and we have the high of these wicks, okay, and we have a really small body, okay. But notice how, let me take this away. Notice how soon as we started closing above this candle's high, right, because remember, on bullish candles, the open is at the bottom, the close is at the top. Bearish candles, the open is at the top, the close is at the bottom. Once we got that close right above this candle, what happens next? Price shoots up dramatically, okay? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Over 2 weeks from this point, price has shot up, and this doesn't even incorporate any other how can I say, like, aspect of trading. This doesn't even incorporate support, resistance, fair value gaps, nothing. This is just simply candles telling you a story. When we see, I'm gonna say it again, when we see candles like this one, the doji candle that we already identified, the one that really has no body, it doesn't have no real essence to it, we don't trade these candles. We don't really care about these candles. But the candles that have a big body, they're identifiable, and they're showing relevance and context, these are the candles that we want to trade off of. Why? Because these candles are the candles that are giving us the most momentum, okay? I'm going to go over one more example for you guys. You know, I'm just going to scroll to something completely random. I'm going to go to silver. I don't even trade silver, but we're going to go to silver, and we're going to see the same exact things are happening, you guys. Same exact things are happening. All right, so let's just go over something random. It's just random. And you notice I don't have no markups on this chart or nothing. Like, I don't trade silver. I trade gold, but I don't trade silver. So let's find a really decent example here. Trying to find something good. Okay, perfect. Here. This is good. So looking at this example, we notice from at this point all the way down here, price was going down. Or in other words, the bears were in control, right? For how long? Let's see. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. For over 2 weeks, price has been going this way. This is confirming a bear market, okay? With new lows and new highs being made. Well, lower lows and lower highs being made. Now, that's for another video. But notice how, going back on subject, notice how, I'm gonna move this out the way a little bit. At this moment down here, out of all of these other moments, right? At this moment down here, we have this candle, this red candle, right? I'm trying to get that right up on there. We have this red candle. And interestingly enough, as soon as we closed, remember, bullish candles close at the top and they open at the bottom. As soon as we close out this red candle or disrespect this previous day's candle, we get a small little retracement, and then we push up. Another retest or retracement, and then we push up again. Mind you, this is just candle signs. There's no support, there's no resistance, no fair value gaps, nothing else that I'm showing you that could make your trading journey just 10% more successful than what it already is. Just by understanding how candles work, why they work, and when they work. Okay, you guys? So that's going to be all. Like I said, I wasn't going to make this video too long because this is going to be a series, and I'm trying to do this in a specific order so you guys can understand what to look for and how to go about taking trades going on further down the line. Okay, it's not, like I said, not to get rich quick or none of that. It's just trying to give you guys an understanding. So whether you're a seasoned trader or whether you're a new trader, this information is more than enough for you to gear your mind on when to trade and when not to trade. Okay, so that's going to be it for today. I don't want to make this video too long. If you liked this video, if you liked how I explained this, make sure you drop a like, leave a comment for the things that you didn't like, and also make sure you subscribe to the channel and turn on post notifications, because my next video is going to be on understanding FVGs or fair value gaps. Okay, so with that being said, I'm out of here. Oh, and one more thing. If you're not in the Telegram group chat, make sure you get into the free Telegram, you guys. There is no charge whatsoever. I post my trades daily. And just to show you, this was today. So just close, this trade just hit my stop loss today. And this was one of those trades that I posted in my chat room. Okay. Gonna take that off so it can disappear. So this was one of those trades where I didn't use nothing fancy. I didn't use no secret indicators or nothing. Simply just candle science, you guys. And like I said, we make trading so difficult for ourselves that we forget that it's really a simple game. It's only simple when we have a clear understanding on what we're looking at, why we're looking at it, and what not to do in certain moments. All right, so that's going to be it from me. I'll see you guys in the next video. If you haven't already, follow me on Instagram at whothefuckisZay for more trading content. I'm going to do my best to post as much as I can on Instagram and on YouTube, but mainly I post the most in my Telegram, you guys. Okay, I can't express that enough. I post the most in my Telegram, but being as though I'm doing this series for everybody, and you know, I'm going to be posting here. It's just not going to be as often as you're thinking. So my goal is to do at least one video a week. Okay, you guys. So that's it. I'll see you guys hopefully in the Telegram chat. I'm out.